Yesterday, I shared with you this video, which was an analysis on my part of the second quarter earnings call from Nvidia, in which Jensen and Colette shared with me that they were partnering with 8 companies. One of the companies, Lavino, I can't buy, but the other 7 I can. And so when I look at a stock, the first thing I do is say, okay, this is a company down the street, and I'm going to put $1,000 or $100,000 into it. What's the first questions I would ask? I would ask, well, how long you been in business? What kind of revenues do you have? And do you make any money? And that's the most important. I leave the most important question to the third. And so that's how I approach the 7 stocks that I can buy that Jensen and Colette are partnering with. And that would be Snowflake, ServiceNow, Adobe, VMware, and WWP, and then on more of the hardware forefront, Dell Computers and Hewlett-Packard. So what I have is I have a spreadsheet that I go and I look and specifically ask, are they making any money? If they are, what are the projections for earnings per share over the future? And is that a company that I would want to put $100,000 into? If it was a company here in Birmingham, Alabama, would I invest in it? And so I want to take you through that exercise on these 7 companies and share with you my determination based on their profitability and their projected growth in profits. Would I buy them?
Best of Us Investors presents Kerry Griegmeyer.
Okay, so this is a spreadsheet that I created on Google Sheets. And what you see here is all of the stocks that I currently own and how many shares I own of them. And then what I have done is said, okay, what is their projected earnings per share growth over the next 3 years? And so if I'm looking at SYM, they say they're going to have a earnings growth of 53% between now and 2024, 400% between 24 and 25, and 161% between 25 and 26, giving them a total return on investment of 1,897%. If I come down to the lowest performing, it's actually Apple. So I come down here and I've entered the stocks that Jensen and Colette have said they're partnering with, and I'm asking, okay, like I said, based on their projected growth of earnings, is this a stock I'd want to own? This is Snowflake. This is ServiceNow. This is Adobe. Then we have VMware, WWP, Dell, and Hewlett-Packard. And what I've done then is done my research and found from their earnings reports and their analysis on Seeking Alpha, and then Wall Street analysis, this is their growth. Snowflake's anticipating a growth in earnings of 176%, followed by 50%, 65%, giving them a 3-year average rate or total rate of return of 585%. Where would that rank amongst my current holdings? It would rank number 2, just in front of Nvidia. Okay, how about ServiceNow? ServiceNow is projecting 23, 23, 26, giving a 91. Where does that fit? Well, that fits right up there with Rambus in my third tier. As you can see, I have those over 100, those above 200, those above 50, and so on. So ServiceNow is worth a longer look. Adobe, I'm not so sure. That's down in my 4th tier. VMware, I don't think I'm interested. WWP, which I've learned is more of an advertising company, and look at Dell. Based on Dell's projections, their own projections, they'll lose 9% on their value over the next 3 years. I don't want to own that. How about Hewlett-Packard? They're an also run, but less than Apple, which is my lowest now. So I don't think I want to own, or I don't think I want to look more into any of these other than Snowflake and ServiceNow. What I'll then do is bring technical analysis into it, and I'll look at some charts, and I'll use what Mark has taught me using the MACD and the Scholastic and some other elements. Where should I buy Snowflake? It's currently selling at 152. Where should I buy? How about ServiceNow? Is it at its 52-week high? And where are its resistance levels? And what direction is it going now? That's the next step I'll go through as to determining whether I want to buy Snowflake and now, and whether I had indicated I wanted to buy Adobe, but I'm not so sure right now. Unless I can get a heck of a good price, and $525 isn't going to be it. If it comes down into the 400s, yeah, I'd probably take a look of it. That is going to be something that I'm adding to our website. What do I mean by that? This is our website, Best of Us Investors. If you go to services, you'll see that's where I'm sharing Kerry's portfolio, the Bus 13, the Bus 12, Trent's charts, members only. Then the technical analysis over here in our platinum level with swing trading, our watch list. You're going to see a element here that will be added, and that will be portfolio management. And that's where I'm going to bring technical analysis into the chart that I just showed you. How do you become a part of this? You come down here and you page down and you become a member. You can come and just be a part of our Discord. You can pay $20 and see all my portfolios and the portfolio analysis that I just shared with you. But if you want to get into the technical analysis where I hire other people to help manage my portfolio, that goes for $60. So that's what this is all about. We're trying to help you make better investment decisions. Okay, I hope you follow my process here. The first thing I did was take advantage of the ability to eavesdrop on Colette and Jensen on their quarterly earnings call. Figure out where they're going, evaluate them as individuals, and make a decision, is this a company I want to invest in? Then they shared with me who they're investing in, who they're partnering with, and so I use fundamental analysis to determine, is that a stock going in the direction that I want it to go? And what that direction is up in share price. So how does share price correlate with revenues and with profits? I believe the best correlation will be if they make more profit and earnings per share reflect that profit, that's going to directly affect their share price. And so that's a stock I want to own. Whereas on the other hand, Dell, who actually is saying we're going to lose money over the next quarter and the next year, and then we'll start making some money. But overall, over the next 30 years, our earnings per share will go down some 7%. Well, I don't want to own that. I don't care what they say on CNBC or other YouTubers. I want to buy a company that's going to pay me with increased price so that the value of my portfolio goes up. Then the next step is what we're going to be introducing next, is the technical analysis. Okay, Adobe's a good stock, but it's $500 and some a share, and it's at the top of, and its earnings are not going to pay me the kind of return that other stocks are. So I need to look technical analysis, and also with Snowflake, where do I buy in? Where will the market take it? And where is my opportunity? And if the opportunity doesn't show up, then I'll just sit on my hands and wait for it. Because I know, as well as I know, stocks will go up, I know they'll go down. So I'll use technical analysis to tell me where is the best entry point. And in the meantime, I'll keep my money in my pocket, okay? Or I'll put it in those stocks that are going to pay me 1,800%. But I don't want everything in that. It's like I got an email from someone, or it was a comment, and said, I'm not retiring for another 10 years, and I've got 80% of my portfolio in Tesla. What? And I got another 10% in something else and another 10% in ARK Invest. Well, you just duplicated your Tesla, but my God, you can't have 90% of your stock, of your holdings, your investments in one company unless you own the company and you know what exactly is going to happen and you're invested your life's work into it. But if you're going to another job and I hope you listen to their earnings report and you know something I don't know. But to put 80% of your portfolio without knowing where that company's going for sure, and then when Tesla, with an exposure like they have in China, come on, put some thought into it, put some work into it, and make good investment decisions. That's what I'm here. That's what the tribe is about. That's what we talk about on our Friday calls. That's what I share with you on our website, Best of Us Investors. I showed you how it works. I showed you what we're going to bring in the future. I just say, get on the bus. Come on. If I can't make you $20 a month or $60 a month by giving you good, solid information and teaching you how to analyze stocks, then don't do it. But don't put 80% of your portfolio just because you believe in Elon Musk. Let's talk more about this tomorrow.